What if you never lost on a stock trade? Every time you entered into an investment, you ended up winning. Wouldn't this be the perfect strategy? Is this even possible to have a 100% success rate? Well, Trade Ideas reached out to me and noticed that I had over an 85% win rate on my trading, and they wanted me to break down for their viewers exactly how this was possible. How is it that I'm able to win over 8 out of 10 times I'm trading, essentially putting the odds in my favor? I know so many people who like to think of the stock market as a casino and randomly gambling, but what if you had an 80% chance of winning? Every single time you put money out there, you only had a 20% chance of losing and you could take down the house. Nay, you could be the house. Well, in this webinar, I want to teach you exactly that. I want to go over the #1 fundamental rule on how you can be successful in stock trading. And I want to break down how to teach you where reversals are going to happen. Because in stock trading, it's not just about finding the best investment, it's about finding when hot volatile stocks are going to reverse. If we can figure out when a stock's going to go up or start going down, that's where true profit is, not by chasing plays that have already gone up or down. So let's break this down into the webinar. This is going to jump right into the Trade Ideas webinar of them asking to teach you how to be able to be successful in the stock market. As always, I'm trying to reach the goal of getting to 200,000 subscribers. Please take a moment, smash that thumbs up and that subscribe button. Thank you so much and enjoy this awesome webinar.
You know, what I want to be talking about with everyone here today is going to be how to find perfect entries in the stock market. Perfect entries in the stock market really does come down to support and resistance and understanding where support and resistance is going to be at. I think every single person can relate, and you guys can raise your hands at home if you guys have ever jumped into a play and it's gone in the opposite direction the moment you have jumped in. Can anyone raise their hand and say to themselves, hey, I jump on in and it seems like someone's looking at my trade. The moment I jump in on the long side, it goes to the downside. The moment I look for it to go on the downside, it seems like it goes on the upside. I feel like we've all been in this position before, and I really want to help you today be able to figure out how to avoid that and how to start getting better entries in the stock market. Because when it comes down to stock trading, we don't just want to find what's the best long-term investment. You know, that is a strategy and that's not wrong. But when it's coming down to day trading and trying to get a quick, nice profit, what we honestly want to be looking for is reversals. If I can figure out when a stock is going to reverse from the downside to the upside, that's when I'm actually going to be able to make more profit. When I can figure out when a stock is about to be heading on down or start bouncing back on up, that's when I want to be jumping in. I can tell you right now that one of the main reasons why traders lose is they focus too much on what they see and not actually trusting what they believe the chart is telling them. What I mean by this is the majority of new traders are actually going to jump into a stock and just hope it continues on its rally. So for instance, if we see a stock up 20% or maybe we see a little penny stock up 100% on the day, a lot of new traders say, wow, this stock is up 100% on the day. I'm going to buy into it because we believe it has gone up 100%. It should keep on going up even higher. And I've been on that thought process before. But in all reality, a lot of times when a stock is overbought, there's a great chance it's going to be doing opposite, which is going to be coming back on down. And after a few weeks of trading, you probably have realized that stock trading is almost a game of opposites, where sometimes when things seem like everyone's making money, don't be the last guy on the train when everything's about to start turning and start dropping back on down for you. So entries and exits really all come down to support and resistance. And I want to start very easy, where every single trader can be able to understand and really just be able to guide you through this to know where the perfect entries are going to be at. So if we just start with a very simple concept of support and resistance, this is what we see here. Support, resistance. We could tell whenever a stock comes down to an area or a platform or a floor, we are going to be able to get a very nice bounce play back on up. And as we come up to the top red resistance line, we start fading ourselves back on down. And this is just a simple explanation to be able to understand where resistance at. And resistance, another word for this, you could basically say this is going to be the roof or this is going to be the ceiling. If we want to say what is support, support is basically just going to be the floor here. And just to confirm this, you guys can see this is the screen that is presenting, right? The one that I'm kind of typing on right here or kind of drawing all over.
Correct.
All right, awesome.
Correct.
Thank you so much. So let's basically just talk about this a little bit more here. Understanding support. Support level is the level at which buyers tend to purchase or enter into a stock. It refers to the stock share price that the company rarely goes below. And usually why this happens is this just comes down to a psychological aspect. Stock trading is based off psychology. When we see that a stock has bounced at a certain price in the past, it's most likely going to bounce at this certain price in the present moment. But a lot of times I think our own personal biased opinions judge that or cloud that judgment, where we start saying, oh, I think it's going to go up higher, or oh, I think it's going to go lower. Why? Because we're in on it at this time. The stock does not care about your current position. Trust me, it doesn't care about my current position either. But we can take a look at many examples, not only from, pictures that I have on this presentation, but also again from our trade ideas charts that I'll show you guys in a little bit, of understanding just by looking at this picture, wouldn't it make sense that our best entries would be right here? Our best entries would be right here. Our best entries would be right here. Or our best entries will be right here. But I think a lot of us fall into the trap of FOMO. And what's FOMO? It's fear of missing out. Where essentially once we see a stock start spiking and rising and start going crazy, we start saying to ourselves, wow, I can't believe I'm missing out on this play. And we end up jumping in right here only to end up getting demolished. That's what we need to start avoiding in the stock market and start waiting for these better opportunities. So support and resistance just go hand in hand. It's really just understanding where these price points are going to be at, where we're going to be seeing a reversal point. Support is going to be the floor, and a resistance is going to be the top. So a resistance level is a stock price that the share value has touched, but has not been able to move through the upside. The resistance level is a horizontal line at the top of the share price chart at the price of the share value has not exceeded for the time period being reviewed. So, and just like today, we can see that there is many different channels that form. And once that you can find a channel being formed, you'll be able to have a lot of success in stock trading. Because as long as you stick with the channel, it's almost like clockwork. If I notice that every time, let's say this is the price of 400 and this is the price of 405, what could I do in my trading? Well, anytime it comes on down to 400, I could buy it. And then I could go do a put contract as it comes up to 405. Then I can again cover that position or sell it, and then I could buy it. Go back up towards 405. And you might say, could it really be this simple and this easy? Today, I was able to make over $500 in profit. I live streamed all of it. You guys can ask any of our members over on Tradecaster. And I'm just going to exit out of this presentation here for a second because I want to show you guys, what we have over on the S&P 500. Today, the S&P 500, essentially the stock market, if you want to think about it in that region. What do we have? Well, we have our top resistance line, which is going to be right along this 399 mark. And we do have our bottom support line, which is right along this 397 mark. I made 3 trades today. A little over $500 in profit. Was I doing anything special? The answer was no. I noticed every time we come up near this red line, what do we start seeing? We start seeing that we fall on down and we start dropping. Every time we come on down towards this blue line, guess what happens? We get a nice dip buy and a nice opportunity to trade. The reason why traders lose in the stock market is we get impatient. We look to enter at random areas. We enter here and here and here. I can't tell you what the stock market is going to do in the middle of the chart. Getting in on the middle, it's a whole bunch of nonsense. It goes up a little, goes down a little bit, goes up a little bit, goes down a little bit. But if we can pinpoint where support and resistance is at, look how much easier this becomes. If you know that every time it comes up towards this area, right around 399 or right around that 399 mark, guess what? I'm going to be able to have profit. So if I just circle this area and I consistently only enter put contracts or shorts in this red box, I'm going to win probably 80% of the time. And if I can go ahead and enter on call contracts or buying shares anywhere in this blue box, I'm going to win most likely 80% of the time. The only time I'm going to lose is when I get randomly in the middle of these areas where it goes on up, goes on down, and that's where you get caught up in a lot of bad plays. So patience is going to be key. And then also other than that, understanding where support and resistance is going to be forming. But just already, I think I'm probably sparking a lot of your interest in saying, okay, hey, if I can see this in real time, I should be able to make money as well. So let's keep going with this lesson and let's keep understanding on, how we could be able to make, a lot of great profit just by, finding our support and resistance. Because eventually what will happen? happen? Well, resistance at some point will break. Resistance or support at some point will have to go. We're never just going to move sideways forever. But most of the time, it will happen maybe 1, 2, 3, 4, 5, 6 different times before we see a breakout. I rarely ever suggest buying for breakouts or buying for cracks because you just have a much better chance of staying inside the channel. So make sure you keep your entries, I should say, to a more realistic area. I get it, guys. We all get very enthusiastic. We all get extremely confident. We all want the stock to break out when we buy it. But it's better to just say to ourselves, hey, this is a great chance of an area of a reversal. Why? Because it's resistance. What is that? That is, again, a price point from a psychological level that other traders have sold in the past, which most likely is going to lead towards a big selling point in the future. So what happens when we break resistance? Well, we start forming our next leg, and this is where resistance is now going to turn into support. So we can take a look at support and resistance on a horizontal spectrum. We can also see it in a higher low spectrum, as in, let's say, an uptrend or a downtrend. And we need to know that after support and resistance breaks, we form new support and resistance lines. So when it comes down to our channels and understanding support and resistance, we can all see resistance is here, resistance is here. Let's say this is the price of $5. The moment we break out of $5 is no longer our floor, or excuse me, our ceiling. It turns into our floor though now. So the best way to really grasp this and be able to understand it is, let's think about a house. Okay, here's our house. And let's say this is a 2-story house. This is you right here standing on your floor. And you can think about it just where you are right now watching this presentation. If you guys look up in the air, there's probably a ceiling right above you. You could be in the basement, you could be on the first floor, or you could be on the second floor. There's probably a ceiling above you. But if there is, let's say, stairs, the moment you walk up these stairs, now you are going to be standing right here. That's all that support and resistance is in the stock. You are sitting on the first floor, and now you're sitting on the second floor. You can always look for bounces where old resistance was at. Old resistance turns into new support, just like if we cracked back on down and went down the stairs, that old ceiling is going to still be holding up as the current ceiling. So don't let that confuse you too much. It is a very simple concept when you understand it and once you get the hang of it. So support and resistance go hand in hand. And we could take a lot of previous examples here, noticing just at this chart, such as BNI, you get these very nice bounce plays right around $75, bounce play at $75, bounce play at $75, and then it turns into resistance at $75. And what I want you guys to really take out of this presentation is knowing, hey, all other entries here and here and here and here and here, these are entries we want to avoid. You must be a stock sniper. A stock sniper does not mean you wake up every single day and you just trade whatever stock is hot. A stock sniper is understanding where our stock's going to reverse. I care about only probably 2 to 3 things when it comes down to my current plays. I look for stocks that are most important, volatile. I look for stocks that have high volatility, stocks that have volume, stocks that have movement. When you have a stock that has no movement, there's no money made towards it. But when there is movement on these plays, that's where you are going to see the biggest rips, the biggest runs, the biggest spikes, and be able to make the most amount of money. We always have to be looking for plays that have good activity. So personally, I like to trade SPX every single day. SPX, a very high volume liquid ETF that goes on massive moves and massive runs whenever the S&P 500 goes on these massive moves and massive runs. I play that nearly every single day. The reason why I like trading that is because as long as there's activity, there's going to be profit because there's going to be reversals. That's what we're looking for here. We can also see in this example right here where we have our old resistance line turns into new support. So the thing is, you can have so many opportunities where you miss out on possible entries. You might say to yourself, okay, we just came up towards a resistance line. Oh, I missed out on this put contract. Oh, I missed out on this short opportunity. Oh, I missed out on this put or short opportunity. But the more times this holds up as resistance, hey, it's okay if you're late on it. Guess what? It's just going to be holding up as the better support line for an upcoming dip buy after it does break on out. So once you actually establish support and resistance, you have possible shorts. That's an entry. There's another entry. There's another entry. We could also get a breakout opportunity. That's another entry. And then you have dip buys after that. That's another entry. So it's all about finding that prime price point that's going to be able to make you as much money as possible. So when it comes down to support and resistance, there's really, again, 3 different support and resistance areas that you need to think about. And these are areas that, I kind of came up with. Some of them are common sense, but others you do want to be able to learn here. So these are going to be natural, past chart history, and detailed. Now, this all depends on what type of trader you are. Are you a penny stock trader? Are you a day trader? Are you trading options? But you can correlate them towards whatever price stocks that you guys like to trade. So first thing that we are going to be going over is going to be natural resistance and natural support. These are going to be strong psychological numbers that are essentially whole numbers. Let's say we start with penny stocks. Penny stocks, you'll notice and you'll realize that usually every 25 cents we'll have some sort of trouble. We'll either have a dip buy, we'll either have a bounce play, usually at $1, $2, $3, $4, $5, these whole numbers, these are going to be great areas for dip buys and reversals. Same exact thing if you want to trade with the S&P 500. Does anyone notice every time we come up near around the 400 level, that's usually where we see some sort of reversal? The reason why is that's a very strong psychological number. Let's take a look at this, over on the S&P 500 and just check out, what's happening around some of these strong resistance, natural resistance and natural support lines. So let's go check out a daily chart right here. Daily chart. Let's get rid of these indicators, right? We don't need, so let's turn off some indicators right here. And let's just put a line right across the board, right around, this 400 region. Usually right around 400, we do see a lot of, especially during the actual day. When we come up towards around 400, it's always going to be holding up as a strong support or as a strong resistance line. For example, right? 400. Let's put it right up here. We didn't get exactly up to that mark, but as we get close to 400, that's a strong barrier to get above. To go from $3.99 to $400 per share, I know it sounds easy, but it's really not. Let's take a little bit of a step back. Let's go back into like a 30-minute time frame here. What happens whenever we come up towards around 400? Well, let's just start back towards right here, team. We can go ahead and we can see we come up to 400, we get rejected. It tries to break 400, it gets rejected. We got a little pop above 400, then it gets rejected. Gets a little bit above 400, then it gets rejected. Then it comes above 400 and then gets rejected. And then finally we break 400. We broke 400. It's a big party. It's a big celebration. And guess what happens? We get this very big spike. Then, of course, what happens? Well, we come back down to 400. Now we get a bounce play off 400 because it's an area that was old resistance. We should be able to get a dip buy off of it. And now it's turning back into resistance as essentially we went down the stairs right here. Now, it's not only going to be 400. We can also look at around like that 410 mark. 410 is probably going to be a strong area of old resistance or old support. Let's just say again, 410. What happens right here? Does anyone notice all these lower shadows? Dip buy, dip buy, dip buy, dip buy, dip buy. Can anyone see dip buy? If we scroll on back, to do it. We're not up near around this 410 mark, but I think you guys can start gauging that, every kind of, especially on these bigger plays, we can see that these marks, these psychological areas usually hold up as strong support and strong resistance lines. And that's what I refer to when I'm talking about natural resistance and natural support, these stronger areas that are going to be holding on up here. Let's take a look over on TOPS. TOPS, this is a penny stock, but what did we realize over on TOPS? What area did it run up to? 125. Came up to 125, 25 cents in penny stocks is going to be a natural area of resistance and support. I'm just trying to see if there's anything a little bit hotter right here. This is right up towards around that 225 as well. But let's jump back over towards our, over towards this presentation and start kind of diving into it a little bit. So we have every 25 cents, dollar marks and 50 cents will be some of the strongest. $1, $5, and $10 is going to be extremely strong support and resistance lines. And as we already did, we looked at some examples today, not just picking things out of a textbook, but showing you how we can actually relate this information to today's market. And it really all depends if you guys are trading big plays, option trades, or penny stocks. What else we can look at for, again, support and resistance, which I think is the best way to be able to look at this, is going to be looking at past chart history patterns, previous spiking highs, previous bounce areas. If you look at the past is going to tell us where all of the best entries are going to be at. It's very simple when you actually think about it. So let's take a look over on the S&P 500, as this has just been like the example that we've been going after. The S&P 500, when I take a look at the past, it's going to actually tell me where is going to be the best areas to be able to get involved, where could I look for possible short entries, where could I again be able to trade. trade. So one thing that I always like to look for is I look for a lot of support and resistance lines, not only just horizontally, but also again diagonally, such as trend lines. There was a monster trend line that actually has been holding on up over the past month or so. And if we connect the dots here, you guys can actually go right up across the board. And what do you guys realize here? This is an awesome past chart history pattern type of play, where what happened? Every time we came on down, we bounced off this area. We also had resistance at this area. We had resistance here, resistance here, resistance here, resistance here. Let me just ask you guys a question. If you saw that we hit this mark and fell and hit this mark and fell and hit this mark and fell and hit this mark and fell, you are going to have great odds of success if you get in on a put contract or a short at this area, or this area, or this area, or this area. Get rid of these circles. Every time it comes up towards this mark, you can see the amount of success that you can get. Now, when it does finally break out and we finally get that big time spike, look what happens. People are so happy it turns into a massive celebration. So you are going to have much better chances of always looking for the move back on down. But when you do get that breakout, which is going to be probably 1 every 10 times, that's where you will get that very big spike. But it doesn't just have to be very tough trend lines, right? I could take a look over on the past chart history pattern and let's say, it's back here. I could say to myself, hey, every time we come on up towards around the price of 415, it seems like there's a lot of trouble. Where does this trouble happen? Well, you guys can see, let me just turn this into a red line. Red line is going to be very strong resistance. And let's just say, all right, comes on up to 415, put contract here, put contract here, put contract here, put contract here, put contract here. What else could I see if I just keep scrolling on back on this play? I think every single person can also state that, hey, we had a very nice uptrend. I think every single person can agree with this, that this makes sense as well. If you guys wanted to jump in on a nice dip buy opportunity, it seems like every time we come on down towards this mark, if let's say we put this into a purple line, you guys can see we have a dip buy here, 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 dip buy, a dip buy, a dip buy. I think the main reason why a lot of people aren't successful in the stock market is not because you guys can't see this stuff. It's just because I don't know if everyone's patient enough to actually wait for these plays. We could also say, well, where could we also jump in on this play? Can everyone see right around the area 408.75 that every time we came on down to 408.75, we got a perfect dip buy? So this kind of comes down to that channel that we were talking about before. If this is what you see in real time, you can always know that you are going to have massive chances of success if you buy anywhere next to this blue line, and you are going to have massive opportunities of success if you just enter anywhere right here. But our emotions get the better of us and we start jumping in on any of this stuff right here. And that's what you guys need to start avoiding. Only get in where you are going to have great opportunities of success. Now, the big thing I want traders to remember here is when it comes down to entries and exits, as I already stated, I'm just going to stick with this picture right here, is you can always look for a crack. You can always look for a bounce play, because a lot of people are going to ask me now, well, how do I know which way it's going to go? Usually it will always bounce off of it. Only 1 out of probably every 10, you're actually going to see a consistent breakthrough. But when it comes down to actually placing our entry, let's imagine we have, let's say, red resistance, okay? But I'm just going to put this at the very top, all right? So that's our red resistance line, and we have a stock that is slowly moving up, slowly moving up, slowly moving up. As we come on up towards this red resistance line, what we want to do is we want to look to put a very strong, we want to put an entry right next to this area. As it comes up to this area, we are now going to get filled. We're now filled on this play and we're looking for it to fall. Our stop loss is going to be right here. Now, why do we place a stop loss slightly above this resistance line? Because look how much room we have to profit. All of this way on down, all of this way on down, all of this way on down is going to be opportunity for us to profit. If we do, for some way or another, if it does break on out, and let's say hypothetically it goes on the spike, guess what? We will take a loss, but that loss is going to be $300, $200, whatever you pick. And if we are successful though, and let's say we fall all the way back on down, this is going to be what? A $3,000 profit. So would you guys be happy taking a risk to win 3,000, but you could also lose 300, getting a 10-to-1? In my eyes, I think this is absolutely incredible. In my eyes, I think this would be absolutely great. And if we stick with actually good entries, we could be able to do this consistently, where we can get in on these plays. Everyone just place stop losses right above this red line. And you can also, again, place stop losses right underneath this blue line. Now, every now and then, will you get taken out? Maybe every now and then, do you get a little bit of a longer shadow or a little bit of a lower shadow? Yes, sometimes that happens. Yes, it is annoying, but don't let it change your trading. If you want to, you can wait until maybe, let's say it pops up above it for a second, then starts going back underneath it, then jump in if you want to. Same exact thing if you want to go ahead and look for a breakout. If you want to look for a breakout on these plays, let's go ahead and just do that same exact example. We could have the stock, let's say, moving itself on up. Your entry is at the same area. Your entry is at that resistance line. You're expecting a possible spike and move on up. You place your stop loss now back underneath that uptrend, or excuse me, back underneath that resistance line. Because worst case scenario, guess what happens? If it does start falling, if it does start cracking, you are going to lose how much money? Let's say $300, whatever you choose. But if you are correct, guess what's going to happen? You are going to have massive success for this big time breakout, getting, 8 to 1, 10 to 1, whichever, again, or how much you can choose. So, just like we talked about with that trend line, just like when we have this big sell off, this dump, if you are looking for that reversal, you have a tight stop loss. You are only going to lose a little and win maximum over and over and over again. So I hope this is really speaking volume to you guys. Let's again continue to move on right here. The last area of support and resistance is going to be detailed. And detailed support and resistance is just going to understand that you're always going to have some sort of reversal area right next to indicators. Previous highs, previous lows, which also go with past chart history pattern. But I really want to focus more on like indicators here. So let's go back to this daily chart, because daily chart is where I use my indicators. And let's just get rid of some of these areas here. And let's throw on these indicators, show our indicators. And like, for instance, a perfect example would be, hey, we're coming up to the 200-day moving average. What did I tell you? Stock traders, the millionaires in the stock market, are not just by picking what's the best investment out there. They're picking where is a reversal going to happen. And you could see right as we come up to the 200-day moving average, guess what happens? We start having a reversal back on down. Now, unfortunately, this is not going to be absolutely perfect every single time. This is one example. But in most days, yes, whenever you do come on down towards great big areas of the 50-day moving average or 200-day moving average, you bounce off of it. Notice how we've been bouncing off the 200-day moving average over the last few days. And I'm a huge advocate that you should only be using moving averages on the daily chart. Some people may disagree with me and say, oh, I use them on the 5 or the 1 or the 2-minute chart. I personally don't. Whatever works for you, whatever floats your boat, but I personally only use it on the daily chart because that is going to have the most strength. But once again, another area to understand where reversals are at. So it really comes down to, this whole entire presentation that I'm going over at this time is, if we want to be successful, we must become masters of support and resistance. Once you master support and resistance in stock trading, your stock trading becomes simplified. We don't need to be caught up and be able to say to ourselves, man, I have no idea what's going on here. All you have to do is be able to find the strongest psychological price point, know that a reversal is going to happen there, and then from there, guess what? It's honestly a 50-50. But is it really a 50-50? Well, not really, because we are now putting the odds in our favor. People always say, oh, stock trading is like, you being a professional gambler. Well, not really, right? Let me again kind of talk about what I mean by this. Yes, if I close my eyes, right? If I close my eyes, and let's just go to today, right? I don't want to pick up some random, past chart history. Let's just look at today, this morning. And I'm going to take, kind of post everything, Let's go to 399, top resistance, as this is where my entries were on my put contracts. And let's go back to our 398 bottom support areas. So, and let's think about this as a gamble, because I always say, if you want to think about stock trading as a casino, you're not the tourist, you're the house. You're not the person getting the cards, you're the person dealing them. You're not the person rolling the dice, you are the person collecting the dice. You are the person that's going to be handing out the chips, not betting the chips, okay? So we always want to be the house, not the tourist. We're not showing up in our little flower shirts and asking our wife if we can have the envelope of $500, all right? We're the pit boss. So if you want to say to ourselves, all right, stock trading is 50-50. I close my eyes, obviously I could pick a stock, it goes up, it goes down, maybe I win, maybe I lose. Instead, let's say to ourselves, let's make it a 60-40. So I think when I take a look over on this chart, I can say to myself, all right, if I say we have come on up to $3.99 and we have dropped, and we have come up to $3.99 and we have dropped, and we have come up to $3.99 and we have dropped, and we want to look for an entry, let's say somewhere right here or somewhere right here, or even if it does get a little pop and falls back underneath here, is it now a 50-50? No, I would probably say at this point, I would probably give you a little bit better odds. I would probably say it's a 70-30. And maybe, of course, if you're saying to yourself, all right, hey, I want to look for a dip buy here, a dip buy here, a dip buy here, a dip buy here, then yeah, you have the odds in your favor because you have a better chance of winning. And then we could throw everything else in there. Oh, hey, we're underneath the VWAP. Oh, hey, we're building higher lows or lower highs. Oh, hey, Jerome Powell's speaking right now about interest rates. We can get the odds in our favor. But sure, if I randomly just buy somewhere in the middle of the chart, that is a 50-50. But we want to make sure every single time we get involved into a trade that we are placing the odds in our favor. There's never going to be 100% in stock trading. This is not just some random channel. This is a channel from today. And if you don't want to look at the channel today, that's fine. Let's look at yesterday, the previous day. The previous day had just as much predictability, and that's how we were able to make money as well. What can we do on the previous day? Well, first things first, we did get this massive dump. Why did we get that massive dump? Well, because again, Jerome Powell started speaking at 10 o'clock. Well, how do we know that? Well, again, we do have to do some research. Research is extremely important. Every single day, you guys should go to marketwatch.com, take a look at the U.S. economic calendar. Economic calendar tells us when, again, Fed Chairman Jerome Powell is going to be speaking. He's speaking at 10 o'clock yesterday. He spoke again at 10 o'clock today. This is obviously when we're going to see movement. I know there's going to be movement at 10 o'clock. So boom, right at 10 o'clock, I know I could be able to make massive amounts of money. Now, 10 o'clock, what else could we be looking at? Well, who's again questioning? The Senate's questioning them, questioning about what interest rates and inflation, always going to be a very sensitive topic. As they were questioning him, they again said that we are going to have to be raising interest rates. These are all things that would make me say to myself, I am never going to be doing a call contract. I'm going to be looking for a put contract. Once again, putting the odds in our favor. We can connect some of the tops right here. Connect the tops, and what do we realize? We have a big downtrend. Every single person that's listening to this right now, you guys can have massive success in your stock trading, but just wait for trend lines to develop, wait for support and resistance to develop, and have that patience to just wait for that right trade. Because if you realize this and you just place stop losses right here, and right here, you are only going to have maximum $300 losses, and whatever your account size is, you can choose it, with obviously massive opportunities to be able to win in the near future. So that's the whole, again, concept of this, right? Being able to break this on down and really be able to understand it. The best way, just want to kind of dive into this a little bit quicker, is for, let's say you want to look for breakouts, always be looking for higher lows or lower highs. So what do I mean by higher lows or lower highs? It's the easiest way to know that a breakout's actually going to be happening. Whenever you see a stock, every time it builds a low, it's slightly higher than the last low. It shows that the stock's moving on up. And whenever you get these triangles, that usually leads to very nice squeezes. You can see most of the time you will be rejected. But when you start forming higher lows, that's where you always get squeezes. Most of the time, it's always better to look for a rejection or a bounce play. Stay inside the channel. But the moment you get higher lows, that's the moment that you guys are going to be able to get the squeeze and the breakout. Most of the time, it's better just keep it inside of the channel. But once you see lower highs or higher lows, that's where you guys start getting a breakout. So I know, again, I went over a lot of information over this last 35 minutes, but I really hope, again, you guys were able to grasp a lot of it, understand that support and resistance really is all you need at the end of the day to be able to be successful. I know there's so much out there, such as indicators and psychology and all this stuff, but some of this stuff, team, you really don't need. The basics and the fundamentals is how you guys are honestly going to have the most success in your stock trading, and that is why it is so important to understand these fundamentals first. Support and resistance, and understanding that past chart history pattern is going to tell us where the present moments are going to be at.